Good morning. Good morning. Welcome to Friday. Welcome. How are y'all doing this morning? If you're here for the first time, my name's Tyler. Welcome. Glad that you decided to join us this morning. We're going to be helping navigate you and talking about the wild world of futures. We're going to be helping navigate you through that and talking about ICT concepts, fair value gaps, order blocks. We're going to be talking about entry models and strategy plans and risk management, all that good stuff during the live stream. So if you are watching, stick around, hit the like button, and we're going to go ahead and get started. Also, if you're looking to take your trading to the next level, you can do so by using the code DTJ and getting anywhere from 30 to 50% on your next evaluation account. Whether you're looking to start out with a little bit of funding or you're ready to go to a simulated live account, you can do so with the code DTJ. I put that in there with the discounts for you guys. So with that, guys, let's go ahead and open in prayer. And then we will talk about the market, do a higher time frame analysis, and see where the market may want to go here in the next few minutes. Father, we just honor you this morning. We thank you for the opportunity we have as traders. Thank you for the opportunity we have to sit in front of the screens, whether our work allows it or it's the time of day that just allows us to be in front of the charts. Father, we just honor you and thank you, Father. Thank you for your provision and your kindness, Lord. Lord, we just choose to honor you despite how we feel. We choose to honor you despite what the circumstances may look like. And we glorify you no matter if we get a win or a loss today. I pray for everyone here, pray for increase in their trading, in their personal walk with you, Lord, that you would bless them richly in every way. In Jesus' name, and everyone said, I think my favorite part is when everybody slaps amen in the chat. I think that's one of my favorite parts. It would just seem, amen, 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 amen. Let it be done. That's what that means. Let it be done. With that, let's go ahead and talk about the market this morning. I'm currently in a long right now. I'm in a trade, and we will see if it stays that way here shortly. We had quite a reaction right there in that candle. But I was long because of this 3-minute fair value gap. So this is the 30-minute reversal. We hit the 3-minute fair value gap. I will tell you, over time, the 30-minute has degraded and it doesn't look as pretty, but it's still respecting that 3-minute fair value gap. So I am still in the trade. Let me pull up my screen and you can check that out there. Where is that? Let me jump over to this screen. And we might close it here shortly. You'll see me close the trade potentially if we close below that fair value gap. There it is. There's the position. I don't know what kind of reaction that was at 820. But if it wants to sweep that low and then push higher, ooh, that would be nice. I'll take that. Okay, so we've had quite a bit of a sell-off here this morning. Quite a bit. There honestly was no entry. If you were looking at the market around this time, during the AM session or during the pre-market, there really wasn't any entry for us it literally just said, okay, I'm going to go now. And it just went boom. And then it hit London low, it retraced a little bit, and then it aggressively ran. Now, the reason why I considered taking a long is we hit the last fair value gap before this swing low down here. Before this swing low. It was a 1-minute fair value gap before that low, and I figured we might take this out at during the AM session. I think you just go with the trend. You go with the trend. I was expecting somewhat of a larger retracement, but we haven't been getting that this morning. So I've already de-risked, and I'm only in it with 2 micros. So we're in the trade for 2 micros. Really, I'm only risking about $200. That's my total risk, is $200 on this trade. And on this trade to the downside, I was able to pick up a few trades right around here. So I have a bit of a cushion. already. So if I take a loss, I'll actually still be positive on the day. But this looked good for a retracement. I was really just trying to see if it can get up to this 5-minute SIBI right here, this 5-minute and 15-minute SIBI. And we really haven't even reached up to there. We've been consolidating. So it's either really heavy or we're waiting for the open and we'll retrace it even more using the opening range gap as a reason to move higher. So our midpoint of the drop is sitting right here. And let's go ahead and mark out our opening range. Our midnight open is way over here. Yeah, it's already been used, so I really don't care about it right now. We got 1 minute before the 3-minute candle closes. We'll see if I'm going to close that trade here. 15. Large opening range gap right there. I de-risked. I took some contracts off. I had 3 contracts, went to 2 contracts once I saw that we were degrading in the 30-minute in reversal. This was the candle I based it on right here. What we closed inside that, and then we got a nice retracement, had some nice structure in price action right here where we got this a low high, lower low into that level, and we came into here. So I got long right in here. And it looked really good, but we've slowly just have made our way back down to this 3-minute fair value gap. So it's still finding support there, but it's not as pretty as it once was. So we have some low resistance liquidity right here. We could, off the open, pump through this and hit this 5-minute fair value gap. So I'm actually going to put my initial target, I'm going to put it to that swing high for that 5-minute in case it just wants to run that and then run the other direction. I want to position my my take profit to be somewhere around there. And then if it wants to continue higher, I'll have one more sitting there, but I can close it. I can close the trade if I need to. So we're sitting in that right now. As far as the rest of the structure, it's been kind of sloppy since we got down here. Another reason why I felt like we hit some type of a low before we see some type of retracement. And I really want to see a retracement before we go lower, before I consider taking anything lower. But with market coming in 5 minutes, I'm definitely going to leave my limit order right there. I'm going to let it trigger if we get up there, because the closer we get around the opening, the more likely we're going to run into that level, and that will give me a win on that 30-minute entry. And then we will have this sitting up here if we want to run all the way up there. But it has been a long while. I got in the trade around 7:35, 7:32, somewhere around there, around this drop, 8:31. It was around 8:31-ish that I got in. Now we're getting some expansion. That's nice. Finally. I'm going to leave that. I'm going to let that trigger and slap that because we got a 15-minute and we have a 5-minute sitting right there. And once that hits that, my average price actually should drop a little bit more. A little bit lower, so I should be in even a better position once it closes, once it hits it. I'm assuming it's going to, based on how aggressive it was right here. This is what I've been waiting for the last 45 minutes, hour. Man, about time. Wilhelm, good morning. Nicolo, Kaz, MR, David, Thriving, Jose, Alexandru, Russ, Shay, Faith, Tamara. There we go. got it. Average down a little bit. So my final price is at 20,782, and I have a limit order set way up here. At the 5-minute change in state of delivery, we got sitting way up here. That's kind of where I have my limit order set. We'll see if it wants to continue higher. I'm going to go ahead and move my stop to break even a little bit in profit to cover if the opening bell runs aggressive. So that put me in at 783 to 840. That was about 50 to 60 points in that trade right there. And we are going to hold this and see if it wants to continue higher for this morning. Honestly, it looks more like it would want to go lower, but some type of a retracement is not a bad idea, depending on how high it wants to go. So how do we figure out how high it potentially could go? So we got to anchor our position. So we have, let me go ahead and mark this here. I'm going to put the 0 and 1 level on here so you can see it while I'm moving it around. Okay. It's this dark line right there. Okay. So this black line right here is anchored to the bottom. And then this black line up here is the top of our fib tool. And if we drop that to the top of this where it started dropping, that's where we can find out where the midpoint is. Look how it nicely lines up with the equilibrium of the weekly range. I like that a lot as a key level. Now you could say, well, I would rather take it to the very top one. Yeah, it would be right there. And that would be, it lines up with the midpoint of the opening range gap. So I like that one too. You can also do the final drop right here, aggressive drop, and that lines up to the midpoint of the hourly SIBI, which I like that as well. So either way, you pick the one that you think is most likely, and that's what you reference. Okay, I'm going to go with this last drop. I like this hourly, and it's right on the midpoint. I feel like some move way up here could be a little aggressive, depending on how heavy we are looking. But we're gonna see how it reacts when it gets to that level. This is sitting at 20,921. So that's sitting at right about here on my chart. So we'll take a look and keep that. There's the opening bell. And we are still going. That's a good sign. We'll see if it holds this green candle. The 5-minute was closed above, and now we're inside the 15-minute. Here's the 5-minute, closed above. I do like the idea of us moving higher. We'll see if it actually wants to do that. My stop's above break even right now, so I'm going to let it play out. I already took profit on one, and we'll let it play out on this one here. John, good morning. Lawrence, good morning. Mark, Jeff, John, Elon, Kelvin, what's up? Mo, how you doing? Matthew, took the same trade. Awesome. We got some news that's going to be coming out here Friday, 9 a.m. So at 10 a.m. we got new home sales. My screen is frozen. There it is. We're sitting close at 100 ticks right now. Just under 100 ticks, probably about 80 ticks, 80, 90, or 80, 90 handles for our position. For those that are looking at what my position is, it is, if you can't see it really well, it is right here. We're looking at that as a target, 140 points. Stop is at break even right now. We have a swing high sitting right here. We just came short of it. That's buy side liquidity. All right, we just swept it inside that. I think I might consider taking profit. Why not? We're going to take profit there. So we just took some profit on that trade. Came out to be 122 handles for that. We hit that swing high. We probably have some more room. Why didn't I let that run? I don't know. I'm happy. I mean, I'm happy if I get a 100-point move. So, nice move. Now we're going to sit and wait and see if anything else shows up. Look how it referenced that midpoint. See the reaction of the midpoint of the equilibrium of that range and midpoint of that hourly? I'm not saying it's not going to, it has to reverse, but I like just the reaction. It tells me it's season. All right, so now that we went through this equilibrium, well, that tells me we need to move up our midpoint, or what is our midpoint? So we'll do it here. We'll see how I like this one as well. It's the midpoint of the weekly range right there. That's a nice level. You can see that candle laying over that nicely. How's everybody doing this morning? How are you able to get into a trade pre-market? Mark, I trade the futures. Futures are open from 6 p.m. to 5 p.m. the following day, or 4 p.m. the following day. So the Nasdaq you can trade at any time. It's not stocks. When I realized that, I was like, what? You kind of go on a little bit of a trading spree thinking you can trade anytime, but you really don't want to trade anytime. Only reason I trade is we hit a low with the last remaining fair value gap, and we started consolidating, and we created this nice BPR that I felt like was a good support level. And then the 3-minute entry for the 30-minute reversal looked there. Let's see what it looks like now as things have played out. So this was the reason I got in, was this candle right here hitting these levels down here and closed inside of this candle. The next one candle closed lower, but it didn't close before the consequent encroachment of this candle. So the midpoint of this wick, I should say. So the midpoint of that wick. Then the next candle came here, opened, and then we have this big move right here. That's after 9 o'clock or at 9:30. So that was the idea behind that trade. You jump to the 60-minute. The 60-minute didn't have an hourly reversal signal there. So now we're just going to sit. We'll see if there's a 10 a.m. reversal or a 10 a.m. continuation. That's what we'll look for at this point. But if we bump out, let's jump up to the weekly time frame here. From the weekly time frame, we've ran this high. Okay, so big expansion candles on the weekly the last few weeks. We closed inside, okay? Depending on where we open, if we have a lower open, I'm expecting us to run down into this volume imbalance next week. Depending on how we open on Sunday, will determine if I think we're going to run for this level here, okay? We came into this last weekly fair value gap right here. We're sitting in that. We just found resistance in it. We hit it and are moving the other direction. So if we close inside this weekly fair value gap in this candle right here, I'm expecting the next one to extend down to this volume imbalance. So that's what I'm going to be looking for from a volume imbalance from a weekly perspective. That's what I want to see happen. We are still in that monthly. We'll move that a little bit. So dropping down to then the daily, what do we got going on? From the daily perspective, the same thing. We've gotten that expand. We had this top. We swept the high, had an aggressive move lower. We ran the low. Let me get some of this. It's just... We swept this high, closed inside the range, swept, ran into the fair value gap. This candle ran this low, so I expected it to stay somewhere in this range or move lower. I wanted lower, but it closed green. And this candle closed or has already ran this low. So this is probably out of the picture right now. And we've reached down into this daily fair value gap, which also includes this volume imbalance right here. So all the way to here is what we got going on. And so we just reached down into this volume imbalance. It's a big, big area. So we could consolidate and work this area quite a bit. If we break that into quadrants, the first quadrant is sitting at 20,652. We'll see if it wants to go lower. Maybe it already did all its work for today, and then we may get a TGIF retracement. And if we get that, we're looking at, it's already in that retracement range. So TGIF is pretty much off the table, in my opinion. I guess you could run lower this morning and come back up and close in here, but I think I don't want to really consider that at this point. From a 4-hour perspective, the 4-hour swept this high right there, swept the high, and the next candle had a large expansion lower. That was the move there from a 4-hour perspective. So London high, that means starting at 6 a.m. we would have looked for a 15-minute fair value gap. 6 a.m., let's see if we can find it. Here's 6 a.m. right here. Let's see if it wicks into a fair value gap that we could use. Right there. Do you guys see that? This is the fair value gap that price wicked into on the 4-hour reversal. I was sleeping. Okay. 15-minute fair value gap right there. That's what we're looking for. Price, oh, not the 4-hour. That's a 15-minute, sorry. 15-minute. And we wanted to see it come into that level at what time? 6 a.m. Because that's when the new 4-hour candle is opened. So we swept the high, boom, moved lower. Now we want it to come back up in a new 4-hour candle into this 15-minute fair value gap. It does. And then you literally would have had to wait an hour and 15 minutes before it dropped. And then it dropped aggressively over the next hour. Aggressively. So that's more of a swing style trade where you could take an entry on that and close your eyes and go to sleep and let the trade play out. Because man, watching that for a good hour, 2 hours would be tough. So that's from a 4-hour. That's the 4-hour reversal from this morning that took place. Now you could have also said, well, we have a 4-hour reversal signal right here. Right? But you have to look at the higher time frame. The higher time frame is bearish. We're rolling over. So I'm looking for premium sweeps of liquidity, not discount sweeps of liquidity. I don't care about this sweep of liquidity right now. Great. But in the higher context of where price has come from, we went higher and here's a giant breaker right here. And we're in the process of falling. Okay? Now, we could come back up to this breaker at some point in the future, most likely. But we're getting that expansion lower right now. So with that in mind, I'm interested in premium sweeps of liquidity, not discount sweeps of liquidity. Why did I consider a discount sweep down here? Because it's after a giant move. It's after a giant move that we're going to get some type of retracement, and that's what we got on a lower time frame. But when we're looking for the continuation plays in line with higher time frame order flow, that's this right here. And we see that nice sell-off there. Let's see if we see it in the hourly. The hourly gives it to us right here. We have a higher, and 4 a.m. we sweep that high. So at 4 a.m. we're looking at 5 a.m. for an entry. 5 a.m. for a 5-minute entry. All right, so here's 5 a.m. right there. And there's our first entry right away. Here's our 5-minute fair value gap. It does close above it. It does make it a little sloppy. But that would have been your entry on the 5-minute hourly. Now, you could have just traded that right there real quick and been done by 5:30. and then see it come all the way back to your stop loss, most likely stop you out, but it respected it and then it moved. All right, so it looks like the midpoint has the equilibrium, and the weekly midpoint is having a reaction to it, and price is slowly making its way down here. We're waiting really for we're not waiting for news, but we're waiting for news, I should say. This is just kind of, there's really no structure here for us to do anything. Can't really do anything in that. Let's see if we see any continuations. All right, so depending on how this candle closes, this will be a 30-minute. I don't like the big wicks. I prefer the small wicks, if I'm honest with you. That's what I prefer, but you can still use the bigger wicked enclosed candles. Jahan, good morning. Roberto, good morning. Palel, Alkai, Tony. Yeah, I haven't marked anything yet. I just been talking about higher time frame. First presented fair value gap was 930, 933. We'll mark that out. And then we'll mark 930 as well. All right, so there's 930 right there. We closed below the first fair value gap. We'll see if it wants to stay below it. Zakes, good morning. Nathaniel, if you want to follow along, yes, delayed charts are very difficult to follow along because everything that I'm talking about is right now. You're not going to have any idea what's going on. My brother's in town. Sometimes he pops in. Ryan, are you on the stream? Say hello. I don't know if he's on or not. I'm going to hang out with him today. Come in from Florida. Buenos dias, my friend. Buenos dias. What's some other good mornings from your country? From the country you're in, what's your good morning? Because I'm going to start saying it. Buenos dias. Always say good morning in your language. And if you have another language or a native language there, I'd love to say. I can't read that, Mark. I'll put it in chat. I'll put it in Google and see if it gives me the sound so I can pronunciate it. Gluten Morgan. Magandang umaga. Philippines. That's buen giorno. Buen giorno. That's so many good mornings. I should learn it. I'm going to learn it. I'm going to learn all the different ones. There's probably way too many. Buna dementia. Doesn't do I'm butchering it. We're waiting, guys. We don't have enough structure. I want to see what kind of structure we got. I'm thinking we probably, guys, honestly, we could play inside of this range all day. And if we are, that's going to be a rough morning. Okay? It's going to be a rough morning. So the only thing that I'm willing to do is either we get a move like this and it gives us the structure to take a trade lower, or we move like this, we fake a move lower, and it gives us an option to move higher. But for us to do that, we'll need some sweeps of liquidity. I would prefer the 30-minute to align with the move as well. Slava. Did I say that right, Mark? Slava. In the house. What's up? Making sure that the ES also is aligning. London high is way up here. London high is sitting up here. That, honestly, look how flat that looks. Look how flat that looks. Doesn't that look a little suspicious? I don't think we're going to come up there right now because we're in the distribution of stage 2. We're in stage 2 distribution. This was stage 1. This could have been the smart money reversal. So this is either stage 1 or stage 2, depending on how far we're going to go. If we go all the way down to here, we're in stage 1. So I would say if we want to go up higher, if it's going to go up higher and go above the weekly low or midpoint, then I would say the previous day low is our target if it's going to do that. AMD, accumulation, manipulation, distribution. Or you could have seen as this would have been, we have our accumulation, manipulation, distribution. And then we just kind of do this until the end of the day. But this obviously was a move. This is not a manipulation. This was a distribution. So we're either going to get a retracement to a consolidation, a retracement to an expansion, unlikely, I don't like that one, or a retracement to a continuation. Okay? So this is our retracement. Now, how does price want to react now that it's retraced? Okay? Does it want to continue the retracement? Is it just going to consolidate at this retracement, or are we going to make our way back down for another continuation? I would prefer the last. The tricky thing about live streaming here, folks, and putting the cards on the table, hit the like button if you appreciate the honesty, the insight, the candor, the lack of language. The tricky thing about live streams is we are live streaming approximately 2 hours a day. We're live streaming in hopefully the most optimal time to get a trade. That's the goal. AM session. Right? But as you can see, many of the trades I've taken have been in the pre-market, have been in the PM session. they have honestly rarely come despite, thankfully we had this move right here that I was already in from the pre-market that continued into the AM session. But the thing about it is, there's an expectation and desire for anybody watching stream for a trade to take place. This is why I'm trying to encourage, this channel is not a signal service of any kind. This is an education channel. Why do I say that? Because it's written down in my journal, folks. It's written down all over the place. It's right here on my screen. It says, can you see it? Take less trades. I'm going to take less trades. And as they get better, I'm going to take even less trades. And because on that trade like that, if I do that, if I can consistently do a model like that, the 30-minute model, wait for those to take place and have the patience to wait 45 minutes for the trade to actually execute, well then I'm going to add to those positions, and that 120-point win is going to turn into a $10,000 day. And then I'm done. So, Anthony, the Discord link does work, but it's a part of the Purpose Driven Trader Academy. Are you in there? I'm not sure if you are or not. If you are, send me an email and I'll get you the link. But these trades I'm going to take less and they're going to be bigger and then I'm going to be done. So these live streams I do for you guys specifically to help with reading live price action. Because education is everything. Time on charts is everything. I'm already going to sit in front of the charts. I might as well teach. I might as well help. And that's my desire. So your goal in these live streams, even if there isn't a trade being taken, is to ask questions. Now, the more people that come in here, the harder it becomes to ask questions. And so, depending on how fast the growth is, will determine how we manage those types of questions, because I want to answer those. And it will either turn into some type of really, really cheap membership, like $1 a month, because how many people are going to be like, oh, I don't want to pay $1 to make a comment? Yeah, but if it limits the amount of people that are asking questions so I can filter through and answer and help people, right? So right now we're small enough, I'm expecting anything under 250 is probably going to be easily manageable where I don't have to do anything. But as it grows, then I want to be able to still engage with the chat in a way that's helpful so you can learn in your education. So we might not take a trade today. And if we don't take a trade, that's okay. We're waiting for price to formulate in a way that can support a potential move. So I'm just saying that because I really want you guys to learn. And sometimes, we can sit here, we won't ask any questions, and that's fine. Maybe you don't have any questions, but you should be studying your charts while you're sitting on the charts. You should be reading price action. Where is it going? What is it doing? And sometimes there's nothing to look at because we're just waiting for example, we've been waiting for 10 o'clock and we just got 10 o'clock right here. So how is 10 o'clock going to play out? Well, let's take a look. So 10 o'clock was right here. Let's look to the 60-minute first. 60-minute, here's our 10 a.m. candle. Let's see if we get a move here to sweep the lows and then move higher. That would be of interest. We'll see. Or maybe it wants to sweep the high and then continue lower. That also would be even more interesting in my opinion. Looking at the 4-hour time frame, this candle is not going to be very helpful because it's going to move up to some degree to then formulate a 4-hour fair value gap. I don't know how big this fair value gap is going to be, but that's what this candle is in the process of doing. So we have 4 hours before we find out where this fair value gap is going to be. Now, we can't just assume that fair value gap is going to be here. There's a high probability we're going to see some type of move higher to give the wick of this candle, or maybe we move lower first and then we move higher, formulating a green candle, then leaving a fair value gap somewhere around here. So this 4-hour candle, the new one, is not very helpful. The larger one that closed, a couple things to note, is we closed inside of this 4-hour fair value gap right here. We actually did not run below that fair value gap's low. So that's the fair value gap low, and we closed inside that fair value gap. So that's a potential sign that we've exhausted our move lower, and we're going to kind of stay inside of this range here. That's from a 4-hour perspective. The 1 hour has closed below. We've swept liquidity right here in the form of London lows from May 13th. And now we are potentially pushing higher. This is an hourly fair value gap right here. Large hourly fair value gap. So I'm going to remove this fair value gap because we've already ran that. Well, we could come back up. This could act as a inversion fair value gap. We'll see if this hourly acts as an inversion. But that means we are waiting for a full hour before this candle closes. That's just too long. So if we drop down to the 30-minute, we'll see if there's anything else here. 30-minute, there's not a fair value gap here. What about the 15-minute? Anthony, I do have a promo code. You can use the code Jesus, and it'll give you a 25% discount. There is not any 15-minute fair value gaps here, so not much for us to work with as far as that goes. So we're going to go ahead and just move this over here. Midpoint sitting right there. I do like this London low. If it wants to come all the way back up there, this London low would be of interest. So literally, we could have all morning and into the PM session, it could do this with potential fake outs to the downside, and then hit this London low, which is also a breaker, and then continue lower. That is a real possibility. Oh, no, Plumex. I'm going to do the affirmation here shortly. Thank you. I kind of got into this thing of looking at the charts and just dissecting the charts here lately. We'll do that here around 10:15 after the macro in case price action really begins to move. But look how it's moving, guys. Look at this. Do we want to be a part of that? Not really. I would say it's a little bit better than what we've seen of just this straight sideways. At least it's, has some type of form to it. But still a lot of wicks. Very slow. A lot of overlapping price action. Give me a second, folks. Need to answer that. Never mind. I accidentally ended the call. Whoops. I mean, even in this retracement down here, we didn't get any fair value gaps. And the only fair value gap we have is sitting right here. We tag 930. I mean, it's not looking good. Let's look at gold. Ooh, gold looks good. Gold looks good for a little bit of a sell-off here. We got some we got some relatively equal lows down here. Popped higher at 9 a.m. and now potentially looking at a sell-off. Let's look at what it looks like on the 15-minute. We did sweep highs. Are we at all-time highs? No, we're not. We swept that high. I like this volume imbalance on gold right there. Probably can't see it when I turn it yellow like that. So I think there's a higher draw. We've ran the previous day high. I take that back. We're already in that volume imbalance right now. We got to drop that. We got to take the volume imbalance with the fair value gap and include that. So the volume imbalance and fair value gap we've already tagged. So we could close inside this range. So if that's the case, the hourly does look like it could at least come back to here. That makes sense. I do like the way this looks. See if it gets resistance here. I like the idea of a continuation right here. It could reach up into here. But I would say I would be looking for a move lower on gold. If we're looking at a lower move on gold, that means we're going to get a bigger retracement on NQ. Because when NQ goes up, gold goes down. If gold goes up, if gold goes higher, NQ goes lower. They're inversely correlated. Yeah, we have an we have an SMT on ES and MQ. Did I say MQ? NQ? NQ? Yeah, it's interesting. Gold says it wants to go lower. That may mean NQ goes higher. Oops. Hamby, I greatly appreciate your live streams. I've tried to do others, but over the top characters are just too hard to stay engaged. I am on every morning for the devotion and prayer. Awesome. Yes. Knowledge is key. Thank you for helping us. Hey, Jenny. All right, let's go ahead and do our daily affirmation. Okay. Let's do the daily. Let's do the daily affirmation. Over the past 2 weeks, I've had the opportunity to go through drawdown and having to deal with things. And my quiet times have been very lively when you are in pain, so to speak. And this is one that meant a lot to me. A verse based out of Psalms 42. Really good one. I won't let discouragement dictate my day. When my emotions dip, I lift my eyes. My hope is not in my performance. It is in God's presence. I will praise him even in the process. Psalms 42:5. Why, my soul, are you downcast? Why so disturbed within me? Put your hope in God, for I will yet praise him, my Savior, my God. Psalms 42:5. Why is my soul downcast? In other words, soul, what's going on with you? Praise the Lord. Find confidence. Put your hope in God. Get out of this funk. Stop feeling sorry for yourself. Oh, there's the push higher. Oh, while we talking, the market's pushing higher. So gold's probably going lower. But when we're talking about how do you handle the disappointment? Does it affect your day where you can't be productive? It has mine. Has it affect your day where you're literally staring at the screen, just hoping to try to do something to get it back, to get rid of those feelings? It has for me. The challenge is recognizing when you're feeling that way and fixing your eyes on Christ, turning to him to pull yourself out of that situation, to pull yourself out. Redirect your feelings. Soul, why are you feeling this way? Put your hope in the Lord. What are his promises? What did he say? He is trustworthy. He is one you can count on. To realign your emotions, to get rid of that funk so that you can be productive. Because there's more than just trading that needs to be accomplished throughout a day. Way more that needs to be accomplished. My question for you guys, put it in the chat. Put it in the chat so you can help others. Because inevitably, every person here has experienced the feelings I'm talking about. Your soul, your feet, you're being down. It's like, you're feeling sorry for yourself. And it's like you want to overtrade or you want to just make it go away by getting a win. What are things that you have done that you can share in the chat that has helped you pull yourself out of those moments? And maybe you haven't and you've struggled and you need to find something. Put them in the chat. What are some ways that you've pulled yourself out of those discouraging moments? How do you get out of that? What are ways that has helped you refocus and then get things done? That's a good one. Go out and run and pray in the park. I like working out. Going playing with your son. That's a good one. Family's everything. That's why we're doing it, right? Okay, so with price doing what it's doing right now, okay? We need to talk about it here. The only way I'm willing to go long is if we come down to this 5-minute fair value gap. We find support and move higher. If we break below that or close below it, I'm not interested. But it also, this 5-minute fair value gap is overlapping with this 5-minute order block. So we got an order block right there. So if we're going to have that continuation higher, that's what I would want to see. And my expectation is it's probably going to happen around 11. So we might do this. Hit that fair value gap and then be more explosive for a short period of time. Maybe we can get 20, 30 handles out of that. You call it coffee with Jesus. Cheers. Cheers, cheers. I do that first thing in the morning. I've started a new routine. I get up at 5 a.m. This morning it was a little strange. I got up at 4 this morning. I've been up for 5 hours already. That's a good one. Good one, Trip. This is TradingView. Yeah, if you're interested in TradingView, you can use, I have a link down in my description. It will give you $15 off when you go get it. Knowing that sometime, honestly, to go to your point, Mo, sometimes it's just letting time pass and being disciplined not to do anything stupid while that time passes. Man, there's been days where it's like, I just feel torn up. And then I go away, do things over, and then I think about what happened, and I have a clearer perspective, and I go, okay, I got this. I'm growing in the Lord. I'm growing in my process. You know, I think about that verse from John chapter 5. John chapter 14, I believe, when it talks about Jesus being the vine and how we're a part of the vine. There's a key word in there that's really refreshing. We're dropping down into that 5-minute. It's a little early. It's 10:20. I'm not liking the time. But look at the price action here. That looks a lot cleaner than this, okay? It's a sweep of that. That doesn't look bad. That doesn't look bad. It doesn't look bad at all. And I'm looking at how this price action's clear. Okay, so we got that 5-minute and we have this breaker right here. We have an inversion right here. We'll see if it wants to come up into this. We did tap that 5-minute fair value gap. Okay, we tapped it. So either we are committed to, you have to decide at this moment right now, do you believe in longs or shorts? Because it's either one or the other. Because if it's a long, then this is your long. Now, time isn't quite aligning. Time's not quite aligning, so that's the only thing I'll say. But this inversion right here, we want to see price to stay underneath this. It's a question on where does price want to go. I like this midpoint. Let's look at is ES. What does ES look like for equilibrium? All right, so we've hit the midpoint on ES as well. Do we want to go higher? Are we targeting the previous day low? Here's the previous day low. And based on this aggression, that may be the case. This is the 5 minute that I said. So what I'll look at is I'm going to do a entry position, a small long position, and see if it will move. It's not a full position if we close above this inversion fair value gap right here, which it looks like we will. So I'm going to take a position here. And if we close back below this, I'm going to remove that position. Target, really, we would be watching this high and then wanting to see it continue to the previous day low. Honestly, I like the previous day low as a target, so 21,040. So we'll go ahead and set a limit order there, and we're going to put our stop loss at the low of this swing low right there. So we have our position set. Let me share my screen so you can see that. We'll see if we get that push higher for that continuation to the previous day low. That is what our target would be. Now, I'm not super optimistic about it running all the way up there, to be honest, because of what time it is. It's 10:25. But price action has cleared up a little bit. Price then closed decisively over this fair value gap. We do need to make a higher high. If we fail to make a higher high, we probably should put our stop at break even. Okay? We need to make a high. So we're watching the midpoint of that wick. So we're seeing if this is a rejection. This is a rejection block. We want to get through this rejection block. I rarely talk about rejection blocks, but this entire wick is a rejection block. We want to see it close or get above that midpoint. That's going to give us some confidence. So we closed on the midpoint. We want it to close above it, and ideally close above this altogether. Because we swept this liquidity right here, that could be a rejection of it and it not running that high. So you could take some profits here if you have multiple contracts. You can also move your stop to break even, which I'm going to do. It's up 10 handles at this point. Yeah, it's coming all the way back down. That's why we're looking at this as a rejection block. Okay, now we want to see this fair value gap hold. If we close below it, stop's going to be ran. Period. Yeah, stop's going to be ran. It'll be a miracle if I stay in this trade. All right, I got stopped out at break even. I hope you guys took profit at the top. I only had one contract, so I really couldn't take size off because I only took one contract in that. So asking yourselves, why did it fail? Why didn't it go through this level? For me, the answer is time. It's not time yet. So we could get that time probably at 10:30. We could get a reaction candle and it could move higher. Or it stays inside this range until 10:45, 10:50, and then we begin to move outside of the range. Okay? That's what we would be looking for. So hopefully we took a trade there. I mean, it played out. It hit target. This would have been the break-even level anyway. So rejection block, turn price around. It swept the minor buy-side liquidity and now is moving the other direction. Ranging from this high and low. I wasn't live. I wasn't live on YouTube. I was in the Discord this morning around 6 o'clock. I'm excited to share something with you guys. Today, I'm going to share a model with you. I'm going to share a trading strategy with you that right now, based on my back testing, has a 66 to 70% win rate. I've tested it so far over 8 months, 9 months, and with two mini contracts, it has made roughly $20,000 with those trades. It is not an everyday setup. It doesn't show up every day. That is why it's only $20,000. I think I've taken 30 trades over 9 months. So it's maybe 2 or 3 times a month that it shows up. But when it does, it's a beautiful, beautiful setup. We're going to go over that here, so stay tuned. Stay tuned for that good stuff. We'll probably do that after 11 o'clock. Or after 11, once that macro is done. I'm doing my back testing on TradeZilla. I moved over to there and I like it. It's convenient. It's easy. It's all right there and it gives me everything right away. So I'm going to be putting all of my models in there. Every model that I've shared here publicly and inside of the Purpose Driven Trader Academy, I'm going to be doing back testing for a year or two worth of data to give that hardcore data instead of it just being a model that I say, hey, here's what I trade. I'm going to show and I'm going to provide the back testing for it. The hard part is some of my trading isn't necessarily specific one model style. It's a combination of things. So I'm wanting to clean that up and be very specific on entry strategies. Because if you have a reversal, let's say we have a 30-minute reversal or an hourly reversal, right? There's 10 different ways you can get in that trade. There's 20 different ways you could get into that reversal pattern. It could be the breaker. It could be a 1-minute order block. It could be a 2-minute order block. It could be a 5-minute order block. It could be a fair value gap. It could be a 5-minute fair value gap. It could be an inversion entry. There's so many different ways to get into a play. And I use a combination of them, which is fine. But for new traders, I want to give clarity on what specifically we're using in each case, which means there might be a lot of different models, a lot of different entry strategies, but the same concept. Hey, price is reversing. Today, here's how we're getting into it. Today, we're using this to get into this trade. Today, we're using this to get into this trade. So it's clear. There's so many different ways. That's why there's so many different people. People can say, hey, I trade, the 930 model. I trade the 5-minute reversal. I trade the change in state of delivery. I trade the 2-minute order block. I trade the 15-minute reversal candle. Like, there's so many things. It's all based off of ICT concepts. But it's just how you wanting to get into the trade. Take note how we called out this 5-minute. We said, I want to see this 5. The only way I'll go long is if we hit this level. We did that. So what did we do? We looked for a long. That was why we took the long that we did, and it just failed to make the high, and I only had one contract. Good morning, Judah. Oh yeah, that is, look at that, back and forth. It's barcoding. Let's look at the 15-minute. I really have conviction that we're going to do this. And then in the PM session, it's going to be a party. It's going to be a skydiving party. Climb up the mountain. Let's jump off. Oh, yes, your channel was live streaming. I forgot. Oh, that's what it was. I forgot to turn off the stream. I forgot to turn it off, and I turned it off this morning when I woke up. That's what happened. So I wasn't actually live trading in London session. It literally, I forgot to turn it off. I saw that this morning and said, whoops. So there's going to be a 12-hour stream in there. No, I wasn't streaming for 12 hours. Chris G, you closed NAS position faster and you didn't take gold if they are inversely correlated. Let's look. Did gold drop? Gold didn't. No, it didn't. It's reaching higher. I mean, here's how I know they're inversely correlated. Okay, look at, all right, you guys can see the cross everywhere my mouse is. You see that hashes that go horizontal and vertical, okay? Look at those over here, okay? I'm over here. While I'm moving that over here, you can see those hashes on the Nasdaq over here. Okay, look right here on the Nas. See how the vertical line is sitting right there on the Nasdaq while I'm moving my mouse on gold. All right. Now, look at where that is at. I'm gonna run my mouse over this price action right here on gold. It's going straight up. What is the Nasdaq doing on the other side? This is going straight up. The Nas is going straight down on the other side. That's what I mean by inversely correlated. Do I mean that if the overall trend goes higher on NQ, the overall trend on ES or on the gold goes down? I do. But how it gets there is it's its own asset. You have to look at gold to figure out how is it going to get there. So when I'm looking at gold right now, I still think it's going to drop, but it's reaching into this inversion fair value gap right here. Look at that inversion fair value gap. We'll see if it wants to, if this is how high it wants to go, or if it wants to reach higher. But based on structure and reaching this volume imbalance, I could see it coming, maybe not all the way down here, but I see it. Oh man, you guys can't see anything. Oh my gosh. Did you guys see anything I was just talking about? Or was I literally just talking to a screen that you couldn't see? Here's the price moving higher on gold. At the same, while that's going higher, this is what was happening on the Nasdaq. It was moving down. That's what I mean. Sorry about that, guys. Chris, I'm glad you're here for the first time. Thanks for joining. I mean, if Nas did go higher closing longs, gold should go higher according to your narrative. That's what you learned from today, first time joining. What I'm saying is that in general, that's the case. It's not a direct correlation. You can't do a direct correlation. I don't even do that with ES. ES is a correlating asset, meaning it does the same thing the Nasdaq does. You can see that here, right? Here's price. I'm trying to get I'm sorry. Here, let me do this. There we go. Okay, so you should be able to hear me. I just took my picture off so I can really show this effectively. Okay. Here's ES. ES is moving lower, and then it's retracing. NQ move lower, and it's retracing. Very similar. Price, there's sometimes that they're not correlating. They're doing their own thing, and it can do that because it's its own asset. But many times, they'll be correlating. So we look for very small differences between ES and NQ that gives us keys to see if something's about to take place. When we're looking at gold, I'm not trading gold in a way that says, oh, NQ is going long, so I'm going short in gold. That's just the generality of how price moves when it comes to gold. So since this morning, gold at 745 exploded higher and made a high. What did the Nasdaq do? It dropped and then is retracing. So I'm saying that gold does the opposite of what the Nasdaq does in general. You don't go, oh, I'm super confident that the gold's going short right now, I'm going to go long on the Nasdaq. You need to go long on the Nasdaq based on structure and your entry model on the Nasdaq, with the additional confluence that gold is supporting that idea. You don't go short. You don't say gold's going short. Okay, enter long on Nasdaq. Don't do that. You'll get destroyed. But what you do is you go gold. Oh, gold's going short. Let me look on the Nasdaq to see if price supports a move higher on this asset. Then you look, you find your entry model, and then you go long based on that. Is 10 a.m. a 30-minute reversal? It's not a model I've traded. 10 a.m. is not a reversal model right now. That's 9 a.m. 10 a.m. No. If I want to, it needs to be at a key level, Tony. Or, I mean, it is at a key level, midpoint of the weekly fair value gap. But what I would have rather seen is this close black or bearish. That's a better sign. I don't want to see a green candle close inside this and then say, oh, it's going short. I would prefer to see a black candle or something like this works too. Green, see how much smaller the wicks are? It's also around a level of sweeping where price sweeps liquidity and then it rolls over. So just look what that looks like and use that as a framework. See this right here? Look at this right here. Price comes up, it sweeps these levels, and then it turns and runs the other direction. Okay, this one's not a sweep of liquidity. Here's one right here. This is a beautiful one. I really like this one. Look at the 7 a.m. candle right here. Sweep of London high. It closes lower. That's a huge sign for a reversal right there. So this candle, we're going short. Okay. Let me see if we can find another one. Here's another one right here. Sweep of liquidity here. Sweep again of liquidity right there. And then it closes red, the opposite direction. And then we have the giant drop. Those are all 30-minute reversals. Now, not all of them are going to play out accordingly or hit our entry or have the entry there, but that's the idea. Oh, Chris, I don't normally mix it with gold. I don't really correlate. I just have people on the chat that like to talk about gold. So I include it in my analysis for gold specifically. But when I'm looking at the Nasdaq, I always have ES on here. All right, so we're in the 11 a.m. macro, and we're not seeing much right now. Pretty much straight consolidation. We did make that higher high right here. Let's see if we break out of here. Do we have any potential? We just don't want to trade in this. This is hard to trade. If you were going to take a trade, the entry, and you're so confident on the move higher, then you should have taken the trade at the 5-minute fair value gap. We did, but it was rejected, and so I just moved my stop to break even. And technically, it wouldn't have stopped me out because we closed inside of that. This was what we went long in. We went long right there. So we would have been in drawdown a little bit, but then it played. I don't like taking trades and stuff like this. So even though it played out, I wouldn't have wanted, I don't want to take it. I'll move my stop to break even and get stopped out and sit and wait and not sit in a trade and have to deal with my emotions. Thanks, Ryan. I appreciate it. For those that don't know, Ryan Brown is my neighbor buddy. Out of all the people on here, people from around the world, Ryan's about 10 houses away. Thanks, Tony. Yeah, we're pretty light on the... All right. How about this? If you guys want to see the model I'm going to share with you, I've shared it before on stream, so it's not like, ooh, oh, wow, something absolutely brand new. But I'm actually putting some data behind it. If you want to see the model and the stats of the 9 months of back testing that I did, hit the like button. Let's hit... What are we at? Let's hit 100. We can get to 100. Let's do 100. Let's get to 100 likes, and we'll do that. In the house. Thank you. Really appreciate that. All right, so 1050 and market is, we potentially have some displacement. We'll see if it actually turns into anything. Do we want to take anything in this? No. So even though you're seeing this, you're not going, oh, it's moving, I better get in. Let's go short, click, click, click. And then what does it do? It goes back into the consolidating range, and then you're just screwed. How am I on gold again? I thought I was on ES. There we go. Ooh, look at that. I just moved the midpoint to the actual high on ES, and look what ES came up and hit. Almost to the tick. Right there. Can you see that? Let me make that obvious for you. All right, price is selling, but we have that high to this low, and here's the midpoint equilibrium, and price ticked it right there. All right, so when I see something like that and then I see price moving, I go, okay, you have my attention. So right now we're going to give price our attention and see if there's an opportunity. We hit equilibrium as well there. So really good, really, really nice. Now this could be our 30-minute reversal here, Tony. Okay. The 30-minute fair value gap sweeps that high, and in the next 6 minutes it's going to close. Is it an SMT as well? I don't see an SMT here. Here's our breaker. If you want to be early on the move, that's the breaker. This is the low with the fair value gap that made the high. It looks a little messy though. I prefer a fair value. I like a fair value gap right there. Oh. Oh, that's embarrassing. We're still interested. We're still interested. NQ doesn't have to make that high if ES did. So that's an SMT, like Auto Scrub was saying. This is the 5-minute SMT for me that I want to reference. Or the, excuse me, change in state of delivery. Let's see if it closes below it right now. All right, we have a change in state of delivery on the 5-minute. That's what I wanted to see. Next, I want to look at from this price leg, where's midpoint, because I don't want to get in too low here. This honestly, we gotta keep it at 930. So this is equilibrium. That's too close. This makes it really tough. I like the trades where equilibrium is way down here and our entry is way up here, and I take the trade to equilibrium in case it wants to reverse. So the problem is, from this price leg on a 5-minute perspective, okay, just to clean it up a little bit, we have this swing low and then it makes a swing high. That midpoint is right here. What if it wants to retrace to the midpoint and continue higher? That's what I'm experiencing right here. That's what I'm seeing. So it makes it a little more difficult to want to take an early trade because of where equilibrium is at. Now, if in fact equilibrium is right here and we take this swing low, then it seems appropriate. But you're assuming that it's going to make you're planning on the lower low of the day. I'm just looking for the trade for a retracement within a price leg. And this is that price leg. 15-minute would seem appropriate. Looks a little bit better if we do that there. So let's assume that's where the 15-minute or the swing low is going to be. That just looks nasty, man. The 5-minute looks horrible. We got 2 minutes before we got the SMT, or we got the 30-minute or 30-minute reversal. The next thing we would look for is a 3-minute fair value gap entry. Here's a 3-minute fair value gap right here. I really, really don't like this. The best trades are the cleanest trades. The best trades that move like butter are the trades that don't have all this going on in it. So this is not an A plus entry that we're looking at here. I will say if we close below this fair value gap right here, I think we move. Look how this price goes up right here. If we close below this, we probably are going to be pretty aggressive, at least to 930, the 930 level. There's not a clean entry here. I'm going to drag this breaker across. Two-minute looks way cleaner. All right, there's our 30-minute SM 30-minute reversal signal on ES. That's our SMT on NQ. So we're not going to have an SMT, or we're not going to have that 30-minute signal on there. So technically we would want to take it on ES, and ES is sitting right here. I'm watching this inversion fair value gap right here. Price closed below the breaker, and it tapped our inversion fair value gap. I want it to stay below that level. There's a good chance it probably won't. ES hasn't come high enough yet. I'm going to take a small entry right here. If we get a little bit of a reaction inside of this, if we come back up deeper into this inversion, I'll probably add a second position. But in case it wants to drop, I'm in the position now and I'm ready for it to go if it wants to go. we're taking the trade based on the idea of two reasons. Number one, on ES, we hit the midpoint of the dealing range. We also hit the midpoint of the weekly range here. So we found some retracement levels. It retraced up to. It also hit equilibrium of the range that we've been watching. If we put that up at the London high, you can see that it's also the red line there is equilibrium of the range. See how it referenced that multiple times? Okay. That's the number, that's the other reason. So those two reasons are why we are looking for a downside move. It may not give us that, but you got to take a shot. You got to take a stab at it, right? So we're right now, really the only thing we're looking at, ES hit the 3-minute fair value gap. So we want to see the 3-minute fair value gap respected, and preferably I would like this inversion fair value gap to be respected as well. If we make a lower low, I will add a position as well. But it needs to break through this small retracement. I need to see it close below this retracement to give me the confidence that we are, going to make those lower lows. That's looking nice right now. ES reacted beautifully to that 3-minute fair value gap. All right, we closed below. I'm not going to add a position until we do some type of retracement first. There's no reason to get it on the expansion. I'll get it on the retracement. May not be this candle here. I might wait for it to expand a little bit and then do a retracement. Equilibrium from this price leg is right here. So honestly, our first TP probably needs to be around 20,875, which is sitting somewhere around there. So if we can get a retracement before we hit this level, I'll add to my position and sell it off there. But if we sell off here, I'm going to watch this level to see how we interact with it, to consider holding it longer or just selling my position. I love this look on NQ right here. I love this right here. I love that. I love when I get an order block and I close below it right around a breaker. Oh, it makes me feel so good. That is a great indication. Obviously, nothing's set in stone, but I've seen it enough to it makes me feel good at least. it's allowable for price to come back up into this small fair value gap. Or I'm on the 2 minute. Yeah, the 2 minute just looks way better. I just like the way the 2 minute looks. Price is allowable to come up into this fair value gap sitting right here. We want it to stay inside and not close above, ideally. What's up, Ted? Well, we'll see if it follows through. The last one we took didn't follow through, so hopefully we get some follow through on this one. That's really what we're trying to get, is just the follow through trade. You could scalp this and take money and leave, but I'm really working on getting the continuation, getting the bigger move. I'm not going to add to my position because that is a full-bodied candle. I would rather of it come up in here and give me a wick and close down here. If it did that, I would have added. But this full-bodied candle tells me it's pushing higher. So I'm waiting for price to give me an indication it's rolling over. But this full-bodied candle is not doing that, so I'm not adding to my position. A large wick in a white candle close would give that indication, or a black candle close, whichever chart you're looking at here. So I'm not a fan of this large bodied candle at 1109. These are all scalp trades you can trade, guys. You target 20 handles, you got it. You're in and out, you're done. This went 30 points. This gave us 30 points of a move. Now what I'm looking for is us to close below this fair value gap that it just created. I want to see it close below that fair value gap. Where is ES made a bullish SMT? Where? I don't see a bullish SMT. Oh, I'm on the 3 minute. Sorry, let me do that again. Oh, on the last candle right there. Yeah. That can create confusion for sure. The problem is you need to stick with once you're in a trade, you don't overanalyze. Okay, there's a SMT there, okay? I'm not going to kill the trade because of it. I'm going to follow the rules. I'm going to let the trade play out. I have my set stop loss, and I want to see where this trade goes without allowing my emotions to pull me out of a trade or not. If I get stopped out, I get stopped out, and I take the loss in the chin. It'll be a 10, 20, 30. It'll be a 60. I'm risking $60 on this trade. $60 to hopefully make 120. And SMT relates to ES and NQ. This candle 1106 on ES was lower compared to the next one, but on NQ it was higher compared to the next one. If we make a lower low, if we make another lower low, I'll be able to move my stop to break stop to these swing highs. That's going to be a great position for my stop loss. It looks like we'll do it, so I'm going to move it right here most likely. We'll see if it closes. It really need it to close. We're going to put it on this swing high right there. That's our protected swing high right now. Now we're risking $40 of risk. We really needed that lower low. Depends on what I'm trading, Danielle. If I'm not following my rule, my win rate's like 50-50. If I'm taking trades that are part of my setup and not my plan, probably more like 60. There's so many things, Danielle. Let's say you miss a trade. How do you handle that? Let's say you take a loss. How do you handle that? Let's say you miss a trade. How do you handle that? Let's say you jump on the charts and you see the most beautiful setup, but you've only been sitting there for less than 2 minutes. How do you handle that? There's so many different things that if you're not mentally prepared, your mindset isn't right, you can get whacked in the face. And it happens to everybody at different times. And it's just how you manage those things. All right, so I wasn't able to add to my position, but because it looks like I'm waiting for this next candle just to be sure that we close. It does look like we closed below it though. I would have preferred the wick, not just the body. I mean, the other thing is, what do you consider a win? Like, I could take a loss on this, but how often was I green? I could close the trade right now and say my win rate is ABC, this percent. But I've been stopped out. I got stopped out once today from a 50-point move, and once yesterday for a 50-point move. I got stopped out at break even because I wanted to play the bigger move. I could close this and be done right now. But I'm working on holding my trades longer, and especially if the chart is showing that price is moving a specific direction, which this chart is showing price at least moving lower right now. When we get to equilibrium, we'll have to make that determination on how it's reacting to that. But I think we should get down to at least 20,875. And if it turns around and runs the other direction and stops me out, well then it stops me out and I don't get the trade. I hope not. I'm in a trade going short. I hope not, Alex. Yeah, Carl, that's right. you have a mistake and you full port. So what the challenge for me is going to be, now if I get stopped out here for a $60 loss, how do I handle that going into the rest of my day? I'll be honest with you. Some days it's great, some days it's not. But it's part of the journey of becoming that elite trader. There's a fair value gap that's sitting right here. Do you guys see that? I hope it doesn't reach up to it, but it might. Should I move my stop loss back to what it was before? See, there's me compromising out loud. No, it was a protected low, so that's where my stop is going to stay. If we run this high, my expectation is we're running these equal highs over here. Danielle, no, I'm a realtor, so I have a real estate business as well. Carl, 100%. All right, guys. It's not looking good. I reduced my risk to 20 handles. We're inside this 3-minute fair value gap right now on ES. Trade still looks good, but there's a good chance I'm getting stopped out here. All right, stopped out. All right, I'm going to stop there. I'm going to do what I promised you guys. Oh, that's not it. Go back. All right, this is the 3 p.m. model. Okay, I've talked about it on stream. I've done a video on it. But this is playing a 3 p.m. reversal, and I traded, so far I've taken a total of 43 trades over the course of several months. And so far, over the course of 9 months, I believe, I've made $18,750. This is back testing. This isn't live trading. This is back testing. It has a 63% win rate. And I had a total of 26 wins, 15 losers, and the 2 break-even trades were mistakes, to be honest, on days that I thought I was taking the trade and I wasn't. So I basically took it out at break-even. So this is a phenomenal return. Steady green, your losses are limited, and there's been a steady increase over the past 9 months or so, I believe. So here's September of 2023. It showed up 3 times in the month of September. In August, it showed up 6 times. August was a great month. All of these were just 1 trade. The loss was 2 trades. The reason there was 2 trades here is because I took the signature and price prior to 3 o'clock, and then it made a lower low at 3 o'clock, and then it gave me the inversion. Here's the month of July. $40, $160 loss, but the wins are 800, 700, over 1,000. These are 2 mini contracts. So you can cut these in half if you want to do a mini, just 1 mini, or 10 micros. Those would be your numbers. I did 2 because I wanted to be able to sell 1 at, let's say, 20 handles and then hold the other one to target. I ended up just holding both of them to target. June had 2 losses, so 3 times it showed up in June, only twice in May, 5 times in April, 5 times in March, only twice in February. So it doesn't show up all the time. So this is a model that you cannot, it's not going to be your main primary trading model. But it is a model that you can use when it shows up. So let's go and take a look at one of these trades. Let's look at this one right here. This is from February 2023. Let's see if we can actually go see the details. Does it not show them? Let's go to February. Oh, what are we doing? I want to be in back testing. I don't know what happened there. Okay, so this model, the rule is you want to see a spooling of price higher. Is it going to allow me to do that? No. You want to see a spooling of price running to make a high. This one makes it at 215, and then it makes a higher high at 247. So if it makes a high between 245 and 315, the high of day, you take the first inversion short or long. So in this case, the inversion was right here. You go short on the close below the inversion, and then you target liquidity down here. In this case, right around the swing low. I put it right at the midpoint of this. You could do another swing low. Sometimes you don't get those big moves, so you want to make sure it's smaller. Okay, so it basically just ran, swept the high. It made a high of day between 245 and 315. There are some cases that I'll take the trade earlier than 245, but no earlier than 230. I've noticed that the 230 sweeps of liquidity that happen right around 230 when they make the low or high of day are some of the most explosive trades. But they don't always happen around there. And they could make a higher high or a lower low if it's at 230. So there's some risk involved. But we see that inversion, it closes and it goes short. Here's another one for $840 that was made. You can see that the high of day was taken, a spooling of price higher aggressively right at 3 p.m. or right at 3:09. Okay? The reason why we didn't take a trade earlier is because it didn't give us an inversion right here. There is no inversion. I would have taken this trade at 252 when I saw these candles, but it didn't close below this fair value gap right here. And if it closed below that fair value gap, that would have triggered my entry. But it didn't, and it decided to make another high, and that high was at 308. Then 308, 309, 310, it aggressively runs below this first inversion right there, and I take the entry right here. And then I end up running and selling that position on this wick candle, whatever happened there at 350. My target was this swing low right down here. And it ran that level. It ran that level on this wick right there. Here's one for $1,040. I'm giving you guys the higher time frame perspective here. So this is price is higher, it moves lower, and at 3 p.m. it's making the low of day. We see a spooling or a straight line of price to make a lower low. And then around 3 o'clock at the 3 p.m. macro, we see this green candle aggressively close higher. Inside there, we have this inversion fair value gap sitting right here. This inversion closes below, or it closes lower, and then it aggressively closes higher above that inversion, triggering our entry. You move your stop to the low of day, just a few ticks below the low of day, because sometimes it will come and it will actually make an equal low, or maybe slightly a tick or so lower. But rarely does it do that. rarely. So we go long here, and our goal is to target this high right here, that small swing high. And we hit that swing high right there. We had to go through some drawdown right here, but what did it go into? It went into this fair value gap sitting right there, and then it moves back higher. Here's a loss. I'll show you what the losses look like. Let me put my face up there. Here's what a loss looks like, okay? We sweep the high of day right here. We sweep it. Beautiful sweep at 250. And then we aggressively close below it. But it decides it's not going to do anything else for the rest of the day, and just slowly consolidates. It never goes above that high, but I ended up closing that position here. When you're doing these actual trades, it doesn't let you take it into after 5 p.m. or I would have held these through 5 p.m. But for whatever reason, it doesn't let me do it. So this trade actually would have ended up potentially at break even or close to break even at 5:02, but it wouldn't let me take that trade. It wouldn't let me do that. So that's an example of a loss. Here's one for $500. When you think it's going to run, but it doesn't, here's an example of what that looks like. We make our low of day. You can see aggressively we've been dropping, and we make a low around the 3 p.m. and then we make an inversion. Now the inversion has to come before 3:15. If the inversion doesn't happen before 3:15, you do not take the trade. It has to happen before 3:15. This trade is inverted at 3:09. Trade is executed at 3:10. We see it retrace. Looks like it's going to go lower, but it doesn't. And it runs higher. I was hoping for a bigger move. So it sweeps this and comes into this fair value gap and then decides to just pucker out. Now again, I sold it right here at 357 because I could not trade it past the closing bell. But you can see it did end up going higher if you were able to hold it through there. I'm not recommending that. All of these are examples of trades that are closed before the 4 p.m. bell. Here's another example. And I'll probably be doing more of this. But you can see we make our high of day. We have a spooling of price here, but it's too early. It's 222. And then we have a last push higher at 247, 250. We have our first inversion right here. Take our short here. Stop losses at the high. And we were looking for a move. But the aggression stops very quickly. It runs lower, and then look at the size of the candles. And so from doing this back testing and seeing these patterns over and over and over again, I'm beginning to notice that when the volume, the size of the bodies of the candles shrink after like 10 consecutive candles, it's going to consolidate the rest of the time into closing. You'll see this multiple times if you were to backtest this. So ended up with just a small profit on that one. Here's an example of a loss. We get the sweep of the low of day. We get the sweep of the low of day right here at 255. And then we inverse this fair value gap right here. So we have an inversion, so we go long. But then what did I just tell you on the last charts? The bodies of the candles shrunk in size very quickly. And at this point in time when I was doing this one, I didn't recognize that pattern yet. So I held it all the way over here and got out when I had to at 4 p.m. So when you see the bodies pucker out, just close the trade. The volatility is done for the day. Here's a $900 win. Sweep of the high, 246. Inversion, entry. Target, I wanted this low down here. We ended up getting it at 341. We got that. Here's a great trade. Here was a very explosive trade. I love these ones. This is what makes them so exciting. We had one yesterday, by the way. We had a 3 p.m. reversal yesterday. And I took that trade. It was a great trade. It was a great trade. Price spooling lower. 228. We make a low. Now, why was I willing to take this inversion? If you look left, what do we have? We have a sweep of liquidity that happened right there. So the reason why I'll take an earlier trade, and this is bonus tip, the only reason you take a trade prior to 245 is if we have a sweep of liquidity around 230. If it's spooling lower and it makes a sweep of liquidity around 230 and then immediately gives you an inversion, take the trade. Take it, because it's going to be a beautiful move. This was a $2,000 move. We make the low at 228, 229, 230. We get our first inversion right here. So there's the close. I'm in the trade at the opening of the 231 candle, or the close of the 230 candle. Stop is at break even, or stop is at the swing low. And now we target. I targeted this swing high right here. And we didn't get it. It came just short of that swing high, and then all the energy puckered out and we just went straight sideways. So I ended up closing it way over here. But those 230 trades gives the charts more time for the move before it puckers out and just consolidates into the close. Guys, I mean, I have example on example on example of this. But the rules are really simple. Here's the 3 p.m. model rules. Okay? We have the spooling of price towards a high or low of the day. The high or low is created within that set time period, 2:45 and 3:15, with the exception of 3:30 when it's sweeping liquidity, and there's an example that we went over. We enter at a 1-minute inversion after the high or low is created. Our exit criteria, this is a little subjective and there's some flexibility in it, okay? The exit criteria is first partial is taken at the nearest swing low or high to put yourself in profit. That's an option. Then you're going to target either a 15-minute swing low, a 15-minute fair value gap, or 62 to 72 OTE, optimal trade entry. Number 3, exit criteria is you're going to close the position by 4 p.m. if you don't hit your target. Now, I think I want to modify this, and I would change that to be when you see volume decrease or you see the candle size decrease, close the trade and just prevent yourselves from losing anything. Yes. Why don't you ask Mom? "30 minutes today." Okay. Now let's talk about market conditions. And that's behind my face, so I'll remove my screen here. Market conditions. Price must spool towards the high or low during the 2 p.m. hour. If we're just consolidating straight sideways and we just wick higher at a high, don't take it. It's probably going to push higher. Stop loss. Stop losses are placed at the high or low of the day. I recommend making sure you give yourself another couple ticks, 2 or 3 ticks above that high in case it makes equal highs and the broker grabs your stop. Your stop loss stays at the high even after you take a partial. Do not move your stop loss to break even. If you do, you have a higher probability of getting stopped out when you don't want to. And those are the rules. So I found this very helpful, and this all came because ICT was talking about a trade he wasn't willing to share with anybody. And so I said, I'm going to figure this out. I did some research. I tried to figure out what could it be. And it was a combination of the spooling of price and the 3 p.m. macro. So I hope this is helpful. I hope this gives you insight. And when you take this trade, I want you to tell me about it, because this is probably the model that I'm most confident in. When I see that low taken, I take the trade. I take the trade and I just sit back, because it's a high probability of it not running that low. I do want to give you one more example before we call it a day, and this is an important one. These are the days where we had 2 losses in a day. So let me go back to find where I took those trades so I can show you, because this is important. I want to give you an example of one of the losses, because it happened multiple times to me, actually. I think it was 2 or 3 times total. I think it was in early April, May, March. Here we go. So it was January 27th. Here's an example of a loss, okay? You can see that price is spooling higher, and as we get closer to the 3 p.m. macro, price is it's still moving higher. Nice move. And before we see this price action right here moving higher, before this happens right here as it's moving higher, and it sweeps this high. We then make a higher high, and then right here, oops. And then right here at 3 o'clock, excuse me, and then right here at 2:55, we inverse this fair value gap right here. 2:55. This is when you would be wanting to take the trade. But you can see we inverse it, and then at 3 o'clock, we make an aggressive move higher. So it sweeps that high and I get stopped out. The next trade I take this day turns into a win because price doesn't make another inversion but goes higher and higher and higher, and it makes the high of day at 3:11. And then at 3:12, it inverses this fair value gap right here. And that's where I took my second trade to go short. Actually, it should be the next trade here. So there is the trade that I took after the loss because it was still inside the 3 p.m. macro when we went short at 3:12. It goes lower. It runs this liquidity right here. And then guess what it does? It retraces back all the way up here. This is why you don't move your stop to break even. Because if you did, you would have been stop out here and not have been a part of this price movement right here. All of this sell move right here. And I ended up getting out at this swing low down here. And I took that trade at that point. So you can get stopped out, but if you get another inversion in the macro, it could still play out. There was only one time out of all my trades that it gave me the inversion and it failed. Then it gave it to me again and failed a second time. I have one trade where it failed twice. That was a big loss. But that's the only time it's ever done that. But that's going to be it. Hopefully that was helpful. Hopefully that was insightful. It was probably long and arduous, but the details are amazing, especially if you want to trade this model. Go back and test it yourself. And if you find success in it, put a comment. Let me know. I would love to hear about your success using this model. So thanks guys for watching. I'm obviously going to turn that into a video. And that's it, folks. That is the gist. And guess what we missed? Absolutely nothing. We're about to enter the lunch macro, but I'm going to be done for the day. So So yeah, Lawrence, do not take a trade earlier than 2:30. Yeah, do not take the inversion before 2:30. Do not take a 2:30 inversion if there's no swing low that it's sweeping right at 2:30 either, because it will make a low and then go lower and lower and lower. Lauren, I'm going to be turning this into a video, and then when this video is posted, it will be all recorded and you can rewatch the live stream. So we're going to be at that, guys. Thanks for watching. Thanks for hanging out with me. God bless, and we will see you all next week. Take care. Bye-bye.